Good afternoon, everyone, and good morning, good evening, where you are joining us from. And once again, I say a very big welcome to everyone. Thank you for making it into our session today. Okay, I think these guys that are joining our session with high notes, I'm not sure we really need that. Okay, so once again, I say a very big welcome to everyone, and I trust we are good And I must say thank you also for your dedication so far, so good, and for making it to this session. Today we'll continue from where we stop. Let's pick things up from where we stopped in our previous session. So, do we have any question, any clarification regarding setting up our model uh, inputs? Right. I'm sure if you are here already, you have a copy of this my workbook. So let's start from there. If you have any question, clarification, maybe you want to ask why this, why that. So I think we should make use of the chat box so that we can save time. That will go a long way. So let's pick things up from there. If you have any question, any clarification, all right, maybe you want to ask the reason why this, the reason why that, the reason we've not done it this way. Maybe there's a particular approach you know before and kind of look different from what we've done or how we are approaching it. Can think you can ask. Just make use of the chat box and let's address that. I would have said I should leave our mic open, but we really don't have that much time. So it's better we just keep it. Uh, let's just make use of the chat box. So question clarification regarding what we've done so far, setting up our input template. So I can see that you guys are typing. So let's wait. I was trying to be careful if I said I should allow open everyone's mic and the whole thing. Okay, so Elijah is saying I am somehow confused about how we are having two dates on the input sheet. Why is it, sir? Okay, so maybe let me see if I can. Yes, so I will open the mic. So I've opened the mic now. So someone just asked a question. Please, can someone help me address that? Not, I don't think this should be a good question, Elijah, by the way, but they said, I'm confused about how we are having two dates on the input sheet. Why is it so far? Please, can anyone help us? So I think you can unmute your mic if you will really help us, want to help us answer that question. Please, anyone, just unmute your mic and help us address that. Please, can anyone help us address Elijah's question? We're having two dates on the input sheet. Why is it? Please, can anyone help us with that? You can unmute your mic. Okay. Yeah, Victor, thank you.
So based on my own knowledge, I think for every business, you definitely have the beginning year and the beginning dates when you are starting the business and the ending year and the ending date. So and it is based on for I think it's just for structuring. So you have to be able to structure your business. So this is what I have this particular day. This is what I have this particular day. So everything is just about structuring and getting based on the people that are going to use the information. So everything has to be in structure. Date definitely has to be there based on my own knowledge. Thank you.
Okay, good one. But I'm not sure that's so. I think the question is asking is why. Thank you for that, by the way. So the question is asking is why do we have dates like this and we have dates like this? Okay, yes, Emmanuel, please.
Good afternoon, everyone.
Hi.
Yeah, so first I would say that the input sheet basically carries everything that fits into the model, and that fits into the model that we're building. And one of those things that the input sheet needs to carry is the date, because date feeds into, because everything we're doing is time bound. And so if you notice that where you have about business, right? Is basically capturing some details about the business name, location, industry, and then currency sign. And then when you come to timing, you are saying this is the time considerations. This is when the podcast is going to start. So it's just basically building out the things that feeds into our model. So, but then you don't have two on the sheet because because we are building out the structure also for the for the model right from the input sheet. So it helps us. It guides us into what we will now do subsequently on other sheets. So I think that's my own perspective.
Thank you for that. And see, at, as I said, the reason why I decided to be very strict, right? As I said, this is not a training, and see, I have so much to do on my own schedule, right? Been trying to even survive past months also because I've also had to do my own office work and things like that. So when when I make time like this, and I'm sure the way I kind of train, I make sure I break things down and explain why before, because I know that will pop up in your brain. So if you've actually been doing your model yourself, yeah, the question you ask is fine, but I feel that should not be a good question at all. It basically means you actually didn't build your own model yourself or somehow. Because if not, you I'm kind of I would like to say it's a bit funny, right? Because it means maybe didn't you've not been building your own model, you've not been doing everything we've been doing ourselves, you've not been doing it or somehow. Because right, we said because we did it step by step. The first thing we did, and I could remember at least, maybe you go back to the recording and check. The first thing we had to do is set up our input assumptions, right? Here about business, and here we said about timing, and we put in our forecast start date, and we use that to project the model date such that even if they decide to, oh, you know what, we are not starting the business in this period, we are starting it maybe in June 2026, or maybe in another year 2027, what happened? This automatically updates. And these calculations is what we now feed into every other worksheet, because we had to duplicate this one worksheet across the model. And you can see this timeline here is picking from this guy. You go to your calculation, the calculation is also picking from this particular date that we've created. So if you've built your own model, you follow the step and everything, I'm sure you would have understood the reason why we had to create these dates, because it is what is feeding into. Go to your cash flow, you see that the date is, they are all picking from here to make it more like a central adjustment, so that there's, oh, you know what, we need to change our dates. All you need to do is to come to the inputs, make that change here, because every other thing on the worksheets, they are all linked to this particular cell, so it makes it easier to flow. Please. And that's one of the reasons I said, do it yourself. Do it yourself. You guys think maybe I'm being strict, I'm not being considerate or something like that. See, that's modeling. There's no two way to it. Okay, why are we using operating profits and not net income in operating cash flow? So please, cash flow. I'm not teaching accounting. So please, see, and I see, if you didn't study accounting, as I said, you can go online and learn structure of financial statement and accounting and the whole thing, right? Cash flow is very, very dynamic. And see, if you don't understand accounting and you are struggling to even understand cash flow, see, I will understand you. Because even people that went to university spend days, spend years, right? They still find it hard to understand cash flow. So whether you are starting with operating profit right? Which is, so if we come to our income statement, whether you are starting with operating profit, whether you are starting your cash flow with EBITDA, whether you are starting your cash, so you can start your cash flow with EBITDA, you can start your cash flow with operating profit, you can start your cash flow with profit before tax, you can start your cash flow with net profit. There's really no specific way for you to start. Now, yeah, there are some companies that they believe they prefer their own structure. Even standard does not even make it compulsory that you must start with one particular line item. So it's for you to understand, either you are starting with EBITDA, how does each line item flow and affect your cash? Either you are starting with operating profit. So for our own cash flow, I think we are starting with operating profit. So which means if I'm starting with operating profit, I assume that every other thing, right, the cash impact has been considered before I get here. So which means every other thing I will need below it must all flow into my income statement. And if you look here, I think we have our interest income, right? So you can see that we have our interest income being added back. Interest expense, you see that we are deducting interest expense from our financing, right? And you can see that our tax is also coming into play as well. So which means if we are starting with operating profit, we must still account for everything below this. Assuming we are starting with our net profit, we do not need to account for interest income, interest expense, and so you just need to understand the flow. You need to understand either you are starting with this, you are starting with that, and that's why we also have this direct and indirect method, where you just focus on everything in flow and everything outflow, and they must always be the same thing, either you are using that or using the other ones. Okay. So I need to, as I said, sorry, don't mind we accountants, right? But just depend on the one you start with. Then you know that, oh, this is the, if I'm starting with this, then that means I need to adjust for all this. If I'm not starting with this, I expect this has been considered in all the line item before I get to that. Okay. All right. So I notice we have marketing in use of fund, and it appears in the operating profit expenses as well. But going by the figure for the year compare for the monthly figure, let's check that. So inputs. So in our use of funds, so we have marketing, which is 30. Then in our operating expenses, do we have market? So okay, yeah. So we have marketing, which is 100K per month, right? So what the person is now saying is, here, if we multiply this by 12, right? So if I multiply this by 12, this is giving me 12,000. So basically, what that is saying is what? Because which means there are some parts of these expenses that are more of what? The operational expenses. So you want to start a business today, definitely you need to create that awareness. That cost definitely might be different from the amount you still need to be incurring on a monthly recurring marketing expenses, right? And you can have cases where the whole 1 year marketing budget plus the pre-operational marketing expenses kind of sum up to what you have here. But most times you might not expect them to be equal, because you know what the impact will be. So if you take this 030, right, instead of this 12 that we need to recognize in on more like on monthly basis, what happen is we'll be over projecting the marketing expenses, whereas they are just some maybe just like initial awareness to the public and the whole thing. Then once public when they've known about it, you don't need to incur that much. You just need to maintain the monthly recurring one, because if not, instead of us increasing 12,000, right, 12k USD, will now be increasing 30 USD. Whereas just so at least if we deduct that from this, then we can account for the portion that's definitely will go as part of the pre-operating expenses. I hope that is clear. I think we also have the same thing for rent. So there are some rent maybe in the first year, because you definitely need to pay some fees, lawyer fee, all those kind of fees that come with you getting your first office place, right? And it's not as if those costs will be repeated in the following year. Definitely, you just need to get the difference and add it as part of our pre-operational expenses. I hope that is clear. Hope that is clear. Okay, so any question? Any question? Any more question? Okay, all right. So please, as I said, you saw what you did on your own as well, and you saw the structure when I sent this my version to you. One is, see, structure is a must. You need to be able to structure your model in such a way that anyone can pick it. They can send the model here to any other country, and they can pick the model and understand it. Structuring is very, very key, because I saw that most of the submission I got, maybe 2 or 3 can actually say, okay, I'm proud of this way you've structured the assumptions. It's part of the learning, and that's why I said, go ahead and do it first, right? So structuring is very good. Now, base price, because they gave us an input, and that's one of the reasons we add this annual input. Okay, now also, please try as much as possible not to include calculation in your input, right? Try as much as possible not to. Now, I know there are some cases where, yes, the client might want to see the output from the input. And for example, now let's say this our pricing, right? Maybe we put this as part of year 1, right? And the next thing we can do is say this, then multiply by 1 plus the growth. The reason why we are putting this growth is for them to enable management, right? To make the model flexible and scalable. And we put this like this. Now, if you do this, yes, we can do this as well. We can do this. But what will happen is this other cell, right? Because they are no longer input, they are calculations, but they can be override because they are in input. What you can do is you can decide to make them. So I can do, like, for example, let me look for one font. So I can decide to make them like this, just another font. So I can make them appear like this. So if you prefer this approach, right, and we also use this approach most times when we are building all this kind of mega model. So what this kind of implies, yes, as I said, try as much as possible. So our concept is try as much as possible not to have calculation in your model. But even if you are going to have calculation, make sure they are more like calculation that can be altered by the management. Right? For example, they don't, they don't want to, they are not sure of the exact growth, but they are sure of the actual value. They can decide to come here and override and say that, oh, maybe this period will be 3.5. Right? So this kind of also protects the model to show that, yes, these are more like, currently they are calculated cells, but you have the option to be able to input your own expected actual value and make sure in any period they decide to do that, the formula still kind of flow. That changes kind of flow somehow. So if you do it this way, this is allowed. Right? I hope I understand it. Please, have any question, ask. So try as much as possible to limit that calculations. So, and part of the reason why you can limit that calculation is to do what? Is to include some kind of management growth, like management addition or changes. So let me remove this. So as I said, this approach is acceptable. It's not as if it's not acceptable. You can decide to use it like this as well. That's still that's still perfect, right? And most time you will decide to do this just to let them see if they decide to change this. So if they say, oh, you know what, let's increase by 5%, they automatically see what the value would be without having to go into the calculations. So if you decide to do it like this, yes, that is fine. But please try as much as possible to reduce. So let me remove this, just an example, so that you see that if you want to do it that way, then that would be more like a preferred way. Okay, so see that pricing growth, cost per unit. So let it also flow like a storyline. So price, how much am I going to be selling my product? What is the cost attached to that? And then we have our unit directly, base units, right? If you also want to use that other approach that we can decide to also put that in this format so that it's easy for them to see how many units will be selling in this period, Okay, so I assume these are 5,500 is per month, right? Please let me confirm, guys.
Yes.
Okay, thank you for that. All right. So I think I suppose so forecast units maybe so per month is always good. You see now, so that's bad of me. So a number per month. Then we have this capacity of what they can also do per month. So that you see the usefulness of this unit, right? Which you can see also happen to me as well. Okay. Then we have our head human resources. I think the clients didn't give us this, but we just have to come up with some kind of fictitious assumptions, right? Per amount to be paid per month. Then even if they decide they want to increase it, I said something like this too, you could have it in that other approach that I just explained now, and just for them to see that and decide to. Then operating expenses, and we made provision for net working capital. Now, net working capital is very, very important, and we are going to see that by the time we start with our calculation. I will also do like a brief explanation so that we can see that. Okay. So are we good to go? Are we good to go? So our income statements, right? And that's one of the reasons when I said, see, I had to reject some people's submission because they did not create it. Is part of the learning. Like as a modeler, it wake you up like this, and they put Excel and said, "Oh, can you help us? Can you create a structure of financial statements? Like just go straight. Know what is linked to what. Know where something is coming from. Know where this. Know where that is coming from." And that's why I said, create it from scratch. Open your Excel, type sales, type cost of sales. Don't go and copy. Right? Balance sheet, some people think they can actually outsmart, but the way I've created that financial statement, like if you do like a copy or you move it, I will know. Like the links will automatically come with it. The link will come with it, and I'm sure many people will not check. And especially if I did that one intentional, which is coming from this networking capital, because they are linked to the balance sheet. So if you move or you copy them separately, by the time you put them in here, the external link will still be there, right? It's just for your own learning purposes. Okay. All right. So now let's start with our calculation. Let's start with our calculations. So I'm going to call this my calculations. Some people call it schedules, and some people call this control accounts. So anyone. And also, please, like, see, which is one thing I want you to really see. It will really help you to learn a lot, right? As I said, some of us, we didn't get the opportunity to see someone that will sit us down to take us through and stuff like that. So maybe you are faced with one problem, don't know how to solve it, then you start doing like internet research, shoving and trying to see things. And when you are looking at it, you are not just looking at it. You are even like to the lowest information, lowest thing, you are taking note of it, right? So please, I saw someone's submission yesterday. I'm not even sure I accepted that person's submission. When I came to their financial statement, right? See what the person did. Just look at this, my worksheet, right? This is what the person did. Now, taking a look at this, as I said, model is also presentation. This really does not make sense. If you decide to print this out, I think I didn't say this as a printable format. If you decide to print this out, look at, you just don't need this unnecessary space, right? And I explained why we're creating this worksheet. So even if possible, you make sure the size, these three deduce column, right? They are more of the same size across. If not, just the structure will just look somehow unreasonable. So please give attention to the lowest thing, even up to the font color. Someone submitted, and I could see, well, after you've described your cell input here, right? I come into your data and I'm seeing different. So you color this different color, different hue. You go to another input cell, you colored it another different color. You see I saw someone's the font size is just way too big, some are way too small, and so those are the kind of thing you need to give attention to. It's part of professionalism. It's part of professionalism, and the earlier you learn it, the better, right? Because that's basically part of professionalism, where someone will do something and they will prefer the way someone else has done it. So those kind of things, attention to it, attention to details, very, very important. Look at how clean mine is. Even if you want to change the color, but don't even change the color. Said, do it the way I've done it. Is said that's the way our brain has actually been created. You need to be able to first photocopy, right, and do it exactly before you can now start improvising on with your own, right? Color blending. You can't just I saw someone orange color mixed with red color, and it was just all over the place. But I think maybe in our next submission, those are the things we also look out for, right? I think it's really getting tougher now, and see, that's just it. Okay, so let's get started with our calculations. And most times it's always good you kind of follow. Sorry, come in, let me just don't need this print line. I think I forgot to set this as a printable worksheet. Okay, yeah. So now, when it comes to the calculation, you can decide to start with any line item. But for this our own, I think it will be good. Let's just start with the structure of our income statement first, pure, yeah? And then we go to the balance sheet and we do it line item one by one. And good thing about it is because we've already created our structure, right? So which means if I decide to type something here, all right, maybe 50,000, and I go to my worksheet, by default, my balance sheet should balance. And even a very good check. So a very good check, a very good thing that we need to do is to come to this our balance sheets, right? So we have our balance sheet here. So let me create like something we call a master check. And what that we do, so is that master check that we're going to link on each worksheet, so that we don't need to be coming here every time to look at our balance sheet. So first thing I will do is sum this my check difference in my balance sheet. I will sum it, and maybe by the side I will now type equal to, if this my total sum check, right? If it's equal to 0, then should give me, open my double quotes, model check okay, right? Then if not, you should just give us model, then open another double quote. I'm sure you know how to use if, right? Model error. So model error, close my bracket and have this. Okay. So please do that. So let me do it again. So I said first thing is come to your balance sheet, this financial statements you've created. Then just, I'm using my own column G here, type equal to sum, and just sum everything from year 1 to year 5. Sum it up, should give you something 0. Then maybe like another cell, just type equal to, if the cell, that total cell check, right? If it's equal to 0, comma, open your double quotes, then type model check okay, model check okay, then close the double quotes, the comma, Then the value, if it is false, then just open another double quote and type model error. Close the brackets. Right? So I think we can use row, I think row 4. Right? So let's go to row 4. Row 4 equal to, so link it to that master check formula that you created. Enter. So go to the next worksheet, right? Go to row 4 and type equal to, link it to that balance sheet check. Now you can lock it so that you can make it bold. And now we can now copy that across. Just make sure all the worksheets has that master check. So that we don't need to be going to our balance sheet every time. So do it, even do it for input, do it across. Do it across all your worksheets. So please check, as I said, also part of this thing you are learning is self-review. Self-review, self-review, self-review. Trust me, can never go wrong with self-review. They said modeling thing is garbage in, garbage out. It's garbage in, garbage out. Before you do the garbage in, garbage out, first thing is to know what you expect as a result. Right? And see, as a modeler, we are also more like an architect person. Right? Because you're trying to draw, they want to build house, you need to draw it. And then by default, you need to first create and draw it in your brain first. So which means you need to know where everything is coming from, how it flow, how it connects. And that's the same thing model is as well. When you are building your model, you know where everything is in your model. They can wake you up from your sleep and ask you something, and you know where it is. That's us, right? I've worked on more than 200 financial model projects. See, if you bring anyone to me today, I just give me like 5 minutes. I'll remember everything, how it connects. Just understand the logic. You don't need to see the formula. I'm sure you know how to use if. So create your total check. That's why I make sure I try to say everything twice. Do your sum of total check for the 5 years. Unless maybe when you created your own, you didn't create the check, or you decide not to update your workbook with my own that I shared with you. Then go to maybe another cell and type equal to if the cell that contains that total check is equal to 0. Type your model check OK. Remember, you need to use double quotes. If not, another double quotes, model error, and close it, then link it across on your workbook. Learning to be very efficient and fast. Yes, need to be very fast. All right. So now let's get started with our calculation, right? And we said most times it's always good you just kind of follow through with the structure of your financial statement, but still you can decide to, as anyone you feel, if you check some of my models, most times I kind of like going with the flow of the business story, right? Which means I'm starting with my funding, which is the first cash flow. I'm going to the capex, how they plan to use the funds, then go to the operation. So you can be flexible with anyone you feel like starting with. But let's just work with the structure. So the first one, so let's start with this will be revenue. So let's start with our revenue. So before we start with our revenue, right, we need to start first with our macro data, because we will need this guy in doing our calculations. So let's call this macro economy. Okay. Then I'm going to call this my call up data. So call up data, put it, then just link all this straight to so I need this for my inflation. Then the second one, I need this for my inflation. So which is, I think I'm supposed to rename this to price. So price inflation forecast, and this is costs. cost inflation forecast is always good. You keep that up. Okay. And then this will be in percent. And I can link that to straight to my input. So let me just work smart. Just copy. So, and that's one good thing about structure, right? When your model has the same structure, it kind of makes something easier for you to do. So for example, I've linked this to my inputs, right? I also link the price to my input. So which means I can just copy these cells, right? And come in here and just paste them as values. And that will automatically do what? Pick up the data for me. And then I can put this, format this into my percent. So it's always good. You also cross check to make sure they are linking correctly to the right cell. Make sure they are linking correctly to the right cells. Okay. Copy that across. I think we created, did we create like a link cell style? Okay, yes. So we created a link cell style. Sure, some of you that were able to watch the cell style recording, I'm sure you you know how to create a model cell style guide, but don't let's waste much of our time on that. So link this and then go ahead and calculate your cost inflation index. So cost inflation index. Then we need our price inflation index. I hope we still remember how to do that calculation. I hope we still remember how to do the calculation. I hope we still remember how to do that calculation. So we are still in 2025. So I think we should let's use the other approach. So we just have base period as 1, right? And then we can increase the 1 by the respective growths. Okay, so can do that across. Okay, it's X. Okay. I'm sure I don't expect anyone to ask me a question around this inflation index. I think we spent the whole session on it already. So set, let's use the approach. So base period become 1, considering we're in 2025 and we'll be starting next year. So I think it kind of makes sense to use this other approach, right? Remember, nominal review. To just grow it by each period growth. So maybe call up and then maybe can even don't need to put that much space. Then calculations. So maybe just call this calculations. Inflation. Okay, so inflation index calculation. So please, it's always good, like make sure it is, so let it read like a textbook. As a modeler, right, the best way you want to build your model, build it in such a way that you don't even want anyone to ask you unnecessary question. So let me put this one in something like this, call out for them to know that okay, this is more like intentional. You don't need to delete this one. So you need to build it in such a way that it's read like textbook. Someone can see, oh, this is the header. This is what you've done here. To avoid unnecessary question. Any question, please? Are we good? Any question, please? All right. And that has no. That should be straightforward. So now let's go to the second one. Okay, so I think this is supposed to be. All right, so we've done the macro. So the next one will be 1.2. Now let's do our revenue. Let's do our revenue. Okay, let's do our revenue. And for revenue, the first thing we need our what? We need our, should we start with our quantity or we should start with our pricing? Okay, let's start with our pricing. Depends, sharp. I think let's start with our pricing. So call this pricing. And the first thing is, let me link that straight to my input. To price, then link that to our growth. So link that to our growth. I said, because following the same structure. So once you link to the first column D, you can always copy and paste as formulas for other worksheets, and it automatically pick that up. So this, we are calling this up from our input first. Then our respective growth for each of the year. Just put this as 5%. Let me remove the 5%. Put it back to 0%. Okay. All right. So what we need to do is equal to, I'll just link this straight to my base. So I'll make this my base period value. All right. So maybe you can even decide to also go with this particular format that we've created here so that they know that this is more like a base. Even if you can decide to go here and add this to our sales style. It's always good when you do things like this, you just keep it up here, even for you to also remember what you've done, right? I can add it to my input and call this my blocked and base cells. So which means I don't need them to, so they don't need to tamper with this. So just call it constant data. Constant data. Do not change. Do not change it or tamper with it. Just give it like a description. Okay. So here and now can now do equal to my base period multiplied by open my brackets 1 plus the growth rate. So instead of doing it in the input, do it in the calculation worksheet. I'm too fast. Yes, sorry. It's part of the learning, but I'm sure we are not doing anything new. Those are things we've done in the previous session. We're just putting it together. So nothing should be new to you at this stage. So do your revenue, and to also check that everything is working, you can go back to the inputs, change the revenue growth, change your revenue pricing growth, maybe 10% in year 3. Go to your calculation, check year 3. Hope it's changing. Yes. And is it changing at the expected rates? Yes. So just make sure that is working, and you can put that back to the base assumptions. All right. We've done this. Then we now need the actual pricing, right? So I'll call this pricing inflated factored. Yeah, so inflated factored, or some people call it inflated factor. So at times some people call it use the real or nominal betting, but don't let that one scatter your brain as well, right? So just do the same thing. And here, just link this to one of our currency. And here, what we now need to do is to what? To multiply the forecast pricing, multiply by what? Multiply by our price inflation index for each period. So do the same thing for the second product. So it's kind of easier to understand. So create a proper flow. A proper flow. Right? So you have your major pricing, then you have calculate to link that straight. Do the growth, the expected, which is the management growth. They decide to want to increase the price in any of the period. That is exclusive of the price inflation factor, right? Remember, the reason why we are considering the inflation is to make provision for time value of money. Okay. And after that, you now apply the inflationary effect on it, and that will give us our pricing. So please, any question on this? Any question on this? Yes, Emmanuel, please.
So I'm not sure I picked out where you mentioned the fact that we're factoring some of the prices are monthly, and given that our model is annual, we're building out yearly. So how do we capture in the fact that some like the price was giving us on a monthly basis? How do we capture that in fleshing it out?
Okay, a good question. A good question. So your pricing is pricing. Yeah, aside maybe there are some like subscription based business kind of a thing, but if it is a normal retail manufacturing business, right? Basically, just you want to buy a bottle of water, you go to the markets. How much are you paying? It's what you are paying, and you are getting that. So it's not as if that price is based on annual or monthly or anything. It is based on the product pricing, right? So the other thing that I've adjusted, so how many units are we selling in the month? How many units are we selling in the on annual basis and or periodically based, right? So pricing has nothing to do with either it's monthly, either it's the price of the product. It's the price of the product. It's only if more of all this subscription based where they're saying the fees, this also amount per annum, per month, and all those kind of things. So pricing is pricing. It is base, right? Then this is the quality, the quantity that we now okay. You know what? So this is the unit we sold in a month. This is the unit we sold on annual basis. All right. So definitely you don't expect to multiply the base price by 12 by period in your model forecast. So right, price is price, base price is base price. This is the amount I'm selling the product. That's it. All right. I think that should be straightforward. Any question? These are things we've done before. We are just replicating it and see how we apply it in the model. That's why I've taken my time to make sure we did the breakdown step by step before getting here. All right. So the next thing is we need our quantity. Quantity. So please, if you have any question, please ask before we go to the next one. So you can see, make it well, like simplify it. It's just part of the professionalism. It's part of what you are learning. So someone does not need to, but maybe we can put maybe header here to and call this pricing growth, pricing growth forecast or increment forecast or anything. So it's easy for someone to pick and they can understand the flow that, oh yes, this is the base price. It's more like a call up. In fact, maybe you can even decide to separate it, right? Don't lump it into one formula. You can see the pricing growth, which is driving what you have up here. And after that, you have your pricing inflated index, factor, inflated factor, which is now considering the time value of money, right? Multiplying that by your what? By your price inflation index. Make sure you are multiplying by price inflation index. Don't multiply by cost. They are different. And now let's go to our quantity. Let's go to our quantity. So equal to, link that straight to my input. Quantity. So link that to my input. Okay. I can also link that here. So just this one, I just need the hash. So quantity per month. So it's always good when you have things like this. So good description. So basically what I've stated that what I'm linking here, they are the quantity per month. Okay, then I think we have our quantity growth, right? So quantity growth. It's always good you learn the right way. Trust me. It can be very, very tiring, a lot of work, but the real modeling, when you get to the large scale of it, it is even more than this, right? So ability to be able to put in those small work now. As I said, that's why I don't actually waste much of my time trying to teach people that I know that, hey, you know what, you are not just ready for this. And you're just wondering, see, financial modelers are well appreciated in the industry. In fact, you are one of the most valuable, it's one of the most valuable skill you can have as a finance person, anywhere, any industry, trust me, because see, it's a whole lot of work. Okay, so let me link my growth as well. You can just copy. So set once you have this, as long as your work sheets are, they all maintain the same structure. It's easy for you to copy and just paste. You don't need to be going back and forth and trying to redo the linking. But as I said, always make sure you recheck to be sure they are linking to the correct line item. And just like what we did here, so what we need to do is to first calculate, convert this into 12 months, right? So which means the monthly multiplied by, so I'm doing this under my basic, the base period, right? This multiplied by, we created a month called, we created the month 12, right? So please do not add code in your formula. So we have a cell. So now first need to, which is where it can be very, very tricky at times. Now we have a capacity. So let me link my capacity first. So capacity, and what's our capacity? A unit capacity, right? Which is more like a unit on monthly basis. So as I said, you are not just building, you are also thinking, right? You as a modeler, you are even questioning yourself. See, that's just the truth. Okay, so instead of converting this to more, let's do it like this. So we first link this, let's do it more like an average monthly. So average AVG quantity per month. Okay, and now let's first grow that average. Let's grow the average first. So you take it a step at a time, right? Let's grow the average. To grow the average. So maybe we should change the units to, so this average per month, maybe we should just put it here. Yep. So average per month, average quantity per month. Okay, I think we should leave it. So just change the header here. So average quantity per month. I think, yeah, this is better. So this is the average quantity. So which means 2026, we expect to sell average of 5,500 units of white bread. The following period, we expect to sell average of 5,742 per month, averagely, right? Maybe when you get to the advanced one, I think I've done some sessions on how we model the monthly model, but understand this yearly one first. Once you understand this, every other thing is more like an artistical work. So do this, and I think we can decide to just keep our capacity constant, right? Even I think we should have tried to consider growth in our capacity. What do you guys think? Should we leave it constant, or should we factor in expected capacity growth? They might decide they want to invest and increase their capacity. Should we include that, or we should just leave it the way we have it? So I said, when you are building your model, just keep questioning yourself, think outside box, think about what thing, any other thing they might want to request for, build it in the model already. Right? This is a very good example. Oh, this capacity seems to be constant. Then the question is, what if they decide, oh, you know what, we want to add maybe 500, 5,000 to our capacity in any period and the whole thing. So I think maybe we should just do that. That would be a good thing. Right? So here, I'll just maybe below it, I'll put it unit capacity increment. So just put in this more like a where they can put actual value. Where they can put actual value. I'll just put this as 0 for now. Right, so maybe they can say, oh, maybe in year 2029, I want to add maybe like a 5,000 to our units, right? And in my capacity, let's include that. The capacity, also link that to my capacity increment. Okay, I can link this. So let's use this our other approach. So equal to base, then the base period, this plus. Now this one is just absolute referencing. So just add this. So which means if they decide on to increase the capacity in year 4, it's just add that 5,000 to be captured automatically. So check self-review, make sure that everything is linked to the expected line. It's a whole lot of work, trust me. And see, it's not beans. It is what we do. It is what we do in the real world of modeling, right? So the earlier you put your mind to it, if you think, oh guys, I don't think I'll be able to cope. Just, just take a bow. So okay, let me put all these ones that I linked directly. So it's always good. You keep that up, your self-style. So as you're building, you keep that up. It's a whole lot of work, trust me. I've built one model before. It's just only revenue, like only revenue. That's what the model is all about. Like no cost, just only revenue, And I think the model has almost 10 worksheets, right? And the calculation for one revenue line item is even taking almost 1,000 rows. So for you to know, almost 1,000 rows, because you need to consider this, factor this come before this, then sensitize, sensitivity scenario. So it's a whole lot, right? And see, you can't run away from it because that's the reality of model build. Okay, so now capacity. Now let's now have our quantity. Let's have our average quantity. Let's have our average quantity. Average quantity, right? Okay, so let's call this actual average quantity per month. Let's first have that. Okay. Okay. All right. Now, this is where, because you need to do a lot of thinking as well. Okay. Do you still remember the formula we can use to calculate to create our capacity constraint? Let me ask us, because thinking is part of it. Thinking is part of, you might need to do something, maybe that thing that you need to do might just take you 5 minutes, but you might need almost 30 minutes to think through it very well. Okay, so now this capacity that we've been given, so let me remove the 5,000. I'm just using that to check that it's working well. Now, this capacity is inclusive of both our what? Both white bread and multigrain. So let me even add our total here. Let's see what we are getting here. Okay, put the borderline back to black. So these are total, right? So total quantity, total average quantity. All right. Now, let's do something. So I will make this 10. Let me make this 10,000. But as I said, when you are doing the calculations, it's always good you kind of do test, check to make sure everything is working well. So now, which means, okay, I think 10 is to, okay, maybe let's make it 11. Let me make it 11. So what we want to do, just want to use that to check your calculation to be sure it's working. So now, the problem here is this. The capacity is based on total. The capacity has not been split between what goes to white bread or multigrain, right? And as I said, as a modeler, you don't need to be asking your clients some questions that are not reasonable. Say, oh, how do you plan to split your capacity? If they know, they would have categorized it for you. So you need to find a way to build that into the model. Even if they decide not to, or they decide they want to change things tomorrow. So one thing is this: the quantity. It seems white bread might be selling more than the multigrain, and if you look at the pricing as well, though I think multigrain has a lower price as compared to white bread. But I'm sure based on if you look at the cost benefits, so let me see. So my pricing minus my cost per unit, so which will be giving more profits. So definitely white bread will be giving at least more direct profits. So which means they might decide to categorize the wheat bread more than what? More than the others. So which means we need to be able to write a formula that will help us do what? Restrict, such that white bread, anything we forecast for white bread will always be what we need, right? And the remainder will now flow into our what? Into multigrain. Please, I'm taking my time to explain this, because see, that is what we do as a modeler. It's not about, oh, the revenue will be 5,000. No, that is budgeting. Budgeting will tell you we're going to sell 5 million next month. We're going to sell 20 million next year, and that's budgeting. But modeling, what kind of do the rough work to lowest granularity and let us get what is driving this 5 million that we are going to make. So now we said quantity, white bread and multigrain. And this is more like the total average quantity. Remember, this is still per month. We've not converted it into year. And here now, capacity. So because our capacity is also what? Capacity, in fact, capacity, let me also use capacity per month as well. Per quantity per month. Description is very important. Okay. Now, which means we are kind of in a tight corner, because the unit capacity has not been divided into widespread or multi-grain. Yes, Manuel, please, you can always type in the chat box so I can always read, can always see the chat box and quickly read through so that we save time to 30. So, which means we first, let's find a way to first make sure that we can meet up our wheat bread. So, equal to, I will just link this straight to my wheat bread. Straight. Okay. Then now, I'll copy this, my total average quantity. So let's sum it together up here. Right? Now, what will now happen is, you see this my total. I will now restrict this my total summation, which will now be equal to, so equal to, is it possible that they might not be processing up to the maximum capacity they have? So as I said, even if our forecast will be up to that, if it is not up to that, you need to build your model in such a way that even if it's the projection exceed the capacity, your model needs to do what? To automatically restrain the forecast into that. That's what we are doing. So equal to, my total will be minimum of what? My total average quantity, comma, and my what? My unit capacity. Close the brackets and drag that across. And you can see from year 3 to year 5, because we are projecting that they might be producing more than that. So what happens is, my multi-grain will now be what? Difference between my total average quantity, which I use that mean, and my what? And my white bread forecast. And look at this. And this will give us exact thing that we need. Do I need to do that again? Do I need to do that again? Do I need to do that again? So this is what modeling is all about. See, it's not about price multiplied by, no, it's about the thinking and how you apply it. So we said we have white bread, multi-grain, and the total average capacity. However, the capacity they have is for the both products. So the capacity is not constrained to maybe, oh, this is capacity of white bread, we can do multi-grain. No, because they can decide to even do what? The same two. Is maybe it's just the mixture of ingredients that's kind of make them different. But still the same machine, still the same tool that we use. Okay. I said, firstly, let's assume white bread, they will give more preference to white bread because it's giving them more profits, which look at the cost per unit, price per unit minus cost per unit. And I think white bread has more preference, right? So here I'll link my white bread directly to what I forecasted. My total, considering the capacity is restricted to total, so equal to my minimum of my average forecast quantity, comma, and my units available capacity. Close the bracket, enter, and I will drag that across. And my multi-grain will now be what? The difference between my total average quantity minus the forecast of white bread, and copy that across. So at times you can even put like a total average, maybe check, so that you are sure. So just sum both of them together, my white bread and multi-grain, to be sure that yes, they are correct. Right? So that you are sure. And now we can go back. So if I change this back to if I change the capacity back to 15,000, right? If I change it back to 15,000, you can see now that even the projection is saying it's not up to what we've projected. It's not up to their capacity. But it's always good you build your tool, make sure you test. What if it is not up to, what if it is more than, right? If you decide to make this 10,000, yeah, look at your calculation, make sure are you sure that everything is capturing that. Change it back to 15,000 to make sure you check and test. That's what we call self-review. Self-review, right? Which is very, very important. In fact, with this, it also gives them more like an idea that, you know what, we can even do more than what we think we can do. Because definitely this is almost like 3,000 like 5,000, 5,000, 4,000, just capacity wasting. Or maybe we can increase our production and what we can do. Is that clear, please? So now we can now put our actual forecast annual growth. Okay. So, and this is where we now multiply that by 12. So you see that processing, you see that step by step structuring to total actual quantity, forecast quantity. So this is what makes you a modeler, right? So it's not about the garbage in, garbage out. So now equal to this my average, actual average quantity per month, then multiply by what? Multiply that by, so we created a month called 12. So please do not add code in your calculations. Please, if you send your model and I say add coded value, I would automatically reject it. So there, this now give us our actual quantity. Our what? Our actual quantity. So you can see the step by step and breakdown on how we build model. Please, this is very important because even if you want to learn, if you are going into project finance modeling, you definitely need this. But project finance modeling is so very interesting that you might need to complete the end, right? And now start inserting rows and rows and rows and rows. So it's more like that. Project finance can be very, very dynamic at times, right? Because what you think was first calculated, maybe it was the last thing that was calculated. So it just kind of has this flow, right? Where you need to insert additional row to do this, to do that. So once you can understand how this structuring and flow works from a basic modeling like this, trust me, it will be very easier for you to learn every other thing. Okay, so you can see just what we are trying to get, and it's better you have it like this. You can see my formulas, straightforward, simple. Something plus something, something minus something, something multiplied by something, sum, means. You can see how simplified those formulas are, and it's easy for you to even run through the model. When you see the model, you can quickly understand what you've done and how you've done it. So now let's calculate our revenue. So let's calculate our revenue, right? Our revenue. So my white bread, multi-grain, we have our total revenue. So our currency is USD. Okay, so I think we created, so let me link that straight to our currency of USD in actual. And also, please always remember to that when you are building your model, maintain this, try as much as possible to maintain the same unit of value. So if your inputs are in thousands, make sure the model are in thousands. If they are in units, just leave them the way they are, right? Okay, then definitely my revenue will then be what? My pricing, which is what? Price inflated factor multiplied by my what? My actual forecast annual growth. Okay, so copy this, then sum them up together, then I can have my total revenue. I have my total revenue. Simple as that. Simple as what? Simple as that. Simple as that. So I think this, put this guy here, revenue. So this is the amount that we are going to make. So which means with this, it's very easy to walk through the driver of the revenue. So we are not just saying we are going to sell 333,000 USD. We are going to generate 33,000 USD in revenue. But what? We have a well properly laid out structure and driver. right? So for fact, for you guys to know, I had to reject some guys' submission because the instruction was clear. Extract your inputs, complete your input extraction, structure it very well. Go ahead, create only your structure. Then I saw like 2 or 3 guys, they went ahead and start building the model. Even the calculation and the whole thing was still wrong. So instruction, let's take it a step after the other. As I said, I could have decided to just put this on YouTube and go and be watching it there. So take it slow. Do it step 1, step 2, step 3. Still went ahead and even do it, and it's still not adding up, not making sense. So let's do it together. The truth is, I've actually not done this. It's not as if I've solved this before or something, or I've done it somewhere. We are both doing it now. All right. Any question, please? Any question? Any question? Is it getting interesting? Is it getting interesting? Is it getting interesting? Is it getting interesting? So structuring, flow is a must when you build a model. You don't need to lump everything, put the formula in. No, break it down, simplify the formula. Simplify the formula. Let someone be able to pick up the formula and be able to do what? To do it and to walk through it. Don't need much formula, something much, but no. Simplify it. Now that we've done this, I'll go to my P&L. As I said, so as you are building, you do what? You try as much as possible to link that straight into your what. So let me link this to our currency. Need our currency from our input. Okay. So now, so the next thing that I need to do is make sure I link my revenue. So as I said, as you are doing the calculation for each line item, you link it directly. So let me reduce this line. Right. Those ones you can reduce them. So at least it's easy to view at once when they are looking at the workbook. Now just equal to, I will link this straight to my what? My calculation, which is my revenue. So as you are doing the calculation, you are doing what? You are linking them. Enter. So immediately you link them, check your balance check. Your model balance check should be what? Okay. Right? Go to your balance sheet, check your balance sheet, make sure that your balance sheet is what? Automatically balanced because you've pre-created the structure. Okay, go to my cash flow, see my cash flow as everything automatically flowing. And for guys that don't understand accounting, this is what is happening. You made a sales, right? The sales automatically flow through all your 3 financial statements. So in other words, I made sales. Let's assume every other thing being equal. How will that flow in? So it will flow onto our operating profit. So let's assume that's where we are starting our cash flow from, right? Our cash flow structure. Now, operating profits comes in here, which is the true cash, right? Then we come to our balance sheet. So that automatically flows straight into the cash flow as operating profit, which you said is more like a completely true cash, right? So it flows to cash flow from operations, then to our cash generated in that period, and form our ending cash balance. So which means period 1 cash plus period 2 cash plus period 3 cash plus period 4 cash. And with that, this cash now goes straight into what? Into our cash flow statement as our what? As our cash. Right? Now, assets, there must be a corresponding what? Other part. So asset, there must be a corresponding liability plus, which is liability, the same thing as equity under it, right? So which means if I come to my retained earnings, that is what flows in there, because this, I said, this is the profit I've made, then automatically also add up to make that balance. So as you are doing it, make sure you look through and understand the flow of each line item. That's part of how you learn it and how you understand financial statement structure. Right? So I'm just trying to put the unit across. And that's why this method is still one of the best methods you can use when you are building your model. Create your financial statement structure, right? So that you don't have to face the problem of my model not balancing. Just trying to link our units. Okay, so you understand how the flow, and this also helps in understanding financial statements properly. Why is it flowing into this? Why is it not flowing into this? Okay, so now that we've done this, the second thing we now need to do is, because currently, right, we are saying all this revenue would be sold and collected in cash. But most times, most of them, they don't come in form of cash, and that is where our trade receivables now comes into play. Our trade receivables, that yes, for accounting purposes, we've actually sold this line item because the ownership of the good has been transferred to the customers. So, and let's assume this business, they are selling directly to maybe like a supermarket, not as if they are selling directly to the last end customer. Now, if they are selling straight to the last end customer, definitely you know that it is cash. It is cash and carry, right? Not as if they will buy bread today and they will now be telling them, oh, don't know, I'll come and pay next week. No. But if they are not selling directly to the last end user, last end customers, right? Which means they might not be able to get their cash immediately, because it's also part of typical business operation where they try to manage cash. So let's say they are selling directly to supermarket, then people go there to buy. Now, supermarkets usually have their own kind of cash management, right? Even if supermarket decides to even pay them immediately, maybe because they are not giving them cash, maybe because of also delay in third-party processing time and all those things, also can create another cash delay. So we need to now consider what we call our trade receivable. So let's create our trade receivable schedule. So I'll call this opening balance, right? So trade receivable, then we have we are adding, let me look at the structure. Okay, so we are adding our revenue, right? So revenue, so we call this revenue recognized. Then we are deducting the cash received. Then we have our closing balance, which will go straight into our balance sheet. Right? Remember, we discussed schedule in financial modeling, that every line item in your balance sheet require a schedule. Okay? So my beginning balance, that will always be closing balance for previous period. Enter. So my closing balance, let me just sum everything up. So which is opening balance plus revenue recognized less cash received. Drag that across. Okay. So maybe put this border there. So definitely the next thing will be our what? This is my revenue recognized. So link that straight to my revenue. So this is more like, oh, this is the amount we've sold. This is the cash that we've been able to receive. So now to get our cash received, that is where our net working capital assumption comes into play. You can say that our receivables will be more like a 10 days, so which means more like 2 weeks period. Okay, so I'm going to link this my trade receivables. I will link the assumption here, trade receivables, right? So I'll link that here. So let me call up that data. Okay, remember, put it in our call up. So now let's look at how we get to do this. So for our trade receivables, because this is in days, so which means if you take them, that's 1 week, let's say 1 week plus inclusive of weekend, right? Because our dates, it's not as if we separated, these are working These are more like working days. These are more like non-working. So let's assume this is 10 days, which means 1 week plus 3 days. Okay. Now, our receivables, our working capital formula, I hope we remember. Can anyone help us with our trade receivables net working capital formula? So that will be receivable. So receivable days, right, divided by days in a period. So which means either you are building the model monthly, quarterly, annual. That's what that days in a period means. Then you multiply that by what? Multiply that by my what? By your revenue. That's for receivables. Okay. And now let's look at what that is doing. So let's calculate our days in a period. So days in a period. So for our days in a period, since we are doing annual, that will just be equal to my current ending date minus my previous ending date. Enter and you drag that across. So there are some days that will be 366, some 365, like that. So that's one of the reasons why we are actually not using the 365 as per constant value. So days in a period, current ending date period minus previous period ending dates. Copy that across. So basically, what I is saying is equal to my receivable days, which I'm going to keep constant, divided by what? Days in a period. Let me do that first. So if I copy that across, let me put it into form, into what? Into percent. So you can also understand that, oh, this, when you either you are using percent of revenue or you are using days, is actually still more like the same thing, right? So convert this into percent. This is what is giving you, right? So we are now saying this value now multiply by what? Multiply by my revenue here. And that will now give us what? The receivables ending balance. So which means this is the outstanding balance. So let me put this also so that you guys can always remember. So total receivables ending balance. So which means this is the amount that is still outstanding as at the time of doing our report, which is 31st December 26. This, let's get that logic very well, right? So these trade receivables that we've calculated there, which is this 10 days, right? And we said, oh, the receivable days divided by days in a period. Okay. I said, so let me go back again. So for our days in a period, we said that will be my current end date minus previous end date. That will give us the days in each period. So even if you are doing monthly, quarterly, semi-annual, still the same thing. And I will say it equal to my receivable days, which I'm going to keep constant, divided by my days in a period. And I copy that across. So basically what this is saying is, oh, by the end of the period, all this our cash is only, we will receive what? We would have received, let me say 1 minus this guy. So we would have received what? We would have received 97.3% of it. And we have 2.7% outstanding. I hope we get that. So now I will now multiply this guy. So let me put this guy back in my value currency. So I will now multiply this, multiply by what? By my revenue. So which means this more like the cash yet to be received as at 31st December, because that's the end of the period for each of these. Now, to now get our cash received, as I said, that will now be what? The 97% of the remaining percent, right? That means we've received it. And to do that, you just do your equal to my, I think that should be my ending balance minus, so equal to, this my calculated ending balance, right? The calculated ending balance minus the summation of my opening balance plus my revenue recognized in that period. And I can drag this across. So you see, the schedule will now give us the same value as the same with what we've calculated here. So that's the proper way of calculating trade receivables. Is that clear? So this helps us to recognize that, oh yeah, this is the revenue we made and we actually collected this cash. And these are the outstanding cash in each period. Okay. And below this, we can now have our changes. So we can have our changes in receivables. Okay, I think okay, we've created that already. So We've created that in our structure here. So in our cash flow, so you can see that net working capital changes. Okay. So if you don't know how to calculate the changes, please check. So what we do is, so if you calculate our trade receivables, I'll come straight to my balance sheet, which is where the trade receivables will go to. So my receivables, just link this equal to, go to my calculation and link that to my closing ending balance schedule. Only the closing balance goes straight into the balance sheet. And you can see automatically your cash flow, your balance sheet should balance. And if you go to your cash flow, you will see changes in your net working capital, which has been calculated. Okay? 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 So someone said I'm not coming back. Oh. When you listen to the recording, that's why I kept on repeating almost everything I've been saying. All right, so now we've completed our revenue calculation. So you can see the procedure, you can see the structuring and everything, the layout. As I'm building, I'm linking, know what drives what, which line item is attached to line item, so that you know that when you calculate A, you can calculate, when you calculate 1, you can calculate 1A under it, 1B under it. So you can see the structure. So I don't need to worry about, oh, I finished building my model and balance sheet is not balanced. This will automatically help you to make sure as you are building the model, if there's any error or anything, you can always quickly check before you continue to the next thing. Now, we're going to call it a session here today. I will share the recording with you so that maybe you missed one part. You can always use that to catch up. Now, your own activity is this. Please go ahead, complete your cost of sales and operating expenses. Right? As I said, we are getting to a very strict level now. Right? Complete your cost of sales using the same properly structured approach the way I've calculated my revenue. Right? So that if anyone look at it, easy to understand. Your workbook must be perfect, must be okay. If you send anyhow kind of workbook, maybe multiple color or anything, I will reject it. Right? Go ahead, complete your cost of sales and complete your operating expenses and share your version with me. This is more like a strict stage that we have now. Give attention to details. You can make mistake. Mistake is allowed in your learning curve, but attention to details. You have done example for you using this revenue. Go ahead, do your cost of sales, do your operating expenses against next session. And please, before Friday, make sure you submit. And the reason why is, by the time you submit, I can share my own version with you. If you've not done it correctly, you can update it before the session. All right. Okay, so thank you, everyone. If you have a question, I think I'll just give it like 2 or 3 minutes before I close, before we call it a, before I close, before I end the session. So I'll share the recording with us immediately when the recording is ready. All right, so thank you, everyone. Please make sure you enjoy the rest of the weekend. And as I said, see, assuming I'm saying we're having session tomorrow, I'm sure you will be available for the session. So you can just use that same energy, like, oh, we have maybe 30-minute session tomorrow. Just use that to quickly complete the tasks, what you need to do. You don't need to keep it that long, right? Because if I've scheduled that we'll be having another session tomorrow, Sunday, I'm sure you find a way to try and make the session. So just use that same mentality, that same idea, right? Just like 30 minutes and quickly get it done. It's part of the learning, right? So thank you, everyone, and let's make sure we enjoy the rest of the day.